Okay, we set up the context, and the 2.5% move on the Dow was extremely positive to see. But let me bring on board Cameron Brandt, Director of Research at EPFR Global, to try and get a perspective as to whether this is sustainable. Cameron, which side of the fence do you sit on? There's one school of thought which says that this is not getting wound up in 2 weeks, and that this sudden surge is unnecessary positivity.
Well, it may be unnecessary, but it's still what I think the market and a majority of investors expect, that Trump will look for an off-ramp, and people want to take advantage. So a lot of what we're seeing very much sort of fits the geopolitical playbook that's developed over the past nearly 20 years. You know, I understand why some people feel this won't be something that you can turn away from on a dime, as they say over here. But what we're seeing and the reaction certainly fits with what certainly investors and markets here have been hanging on to, admittedly, with more and more fear in their hearts that there would be an exit sooner rather than later.
Cameron, hi, morning. You track flows very closely to emerging markets. How do you see flows at this point in time? Do you see emerging market funds putting money into other countries like India, or is the trend showing that they are more inclined to withdraw at this point in time?
Well, certainly emerging markets have had a tough few weeks. It's been very much what you would expect. The countries with big oil import profiles, funds dedicated to them, have suffered. Certainly India falls into that basket. And unlike Korea, doesn't have the kind of offsetting artificial intelligence story that investors are still looking for, despite the chill winds of caution that have swept through the technology story here in the US.
You see yesterday's move in the US market more of an NAV management, or it was a genuine buying coming from Trump's statement?
Yeah, I think people have been doing two things. They've been building defensive positions, or they've been getting their cash ready to move in if they think that they can time the post Iran conflict upswing. So I think it's still at the moment a mixture of both. One thing I sort of have been saying for a while is, though obviously Iran dominates the headlines, there's some other issues that have been certainly worrying investors here almost as much. Those include a pattern of macroeconomic data, which has sort of fueled the stagflation question, and the doubts I mentioned a moment ago about just what the odds are that we'll see the return on investment in artificial intelligence that markets are expecting.
Okay, Cameron, great to have you today on 18 Hours. Thank you so much for your time. Just